Washington Journal continues.
The latest news from the AP looking at what's happening in Egypt. We'll take a look at this for a moment before we go to our guest, Gretchen Morgensen. The AP says that several thousand supporters of President Hosni Mubarak, including some riding horses and camels and wielding whips, attacked anti-government protesters Wednesday as Egypt's upheaval took a dangerous new turn. In chaotic scenes, the two sides pelted each other with stones, and protesters dragged attackers off of their horses. That coming to us from the AP. Wanted to give you that update, keep you in the know on what's happening there. Let's go down to Gretchen Morgensen, reporter for the New York Times, joining us this morning. Good morning.
Good morning.
Thank you for being here with us. In your January 24th piece, you looked at the cost to taxpayers to defend the former executives of Fannie Mae and Freddie Mac, and you estimate the cost to be $160 million so far.
Well, now that includes the defense of the company as well, and so it's not, strictly speaking, $160 million just for those three former executives. But what is really the issue here is, why are the American people continuing to pay these legal bills, which are quite large, for former executives who left the scene quite a few years ago and who were found by several different investigators at regulatory agencies to have really conducted themselves in a questionable fashion.
And let me read the intro to this piece from Monday. Since the government took over Fannie Mae and Freddie Mac, taxpayers have spent more than $160 million defending the mortgage finance companies and their former top executives in civil lawsuits accusing them of fraud. The cost was a closely guarded secret until last week, when the companies and their regulator produced an accounting at the request of Congress. How surprised were you by these numbers, since you've been watching this and covering it?
Yeah, I was really surprised because, wow, 160 million, that's a lot of money. And so what it indicates is that you've got teams of lawyers probably working, furiously and billing many, many hours on these cases. And there really isn't an incentive to, either settle the cases, to move quickly to trial. The perverse incentive really is, because the taxpayer is paying these bills, is to drag this out as long as possible. And that just doesn't seem fair.
Gretchen Morgensen is our guest, assistant business and financial editor with the New York Times. You can call with your questions and comments for her. Republicans, 202-737-0001. Democrats, 202-737-0002. And independent callers, 202-628-0205. Let's dig into these numbers a little bit more. $132 million went to defend Fannie Mae and its officials in various securities suits and government investigations into accounting irregularities that occurred years before the subprime lending crisis erupted. Gretchen, give us some context about what we're talking about. I think a lot of us, when we hear this story initially, we assume that this has to do with just the subprime lending crisis.
Yeah, absolutely not. That's one of the really infuriating aspects of this, is that this goes back to 2004 and 2005. That was when both companies were found to have improperly accounted for their operations. Fannie Mae actually had overstated its income. It had played accounting tricks so that it made its results look better than they really were. And so in the kind of outflow of that, the top executives resigned. It was a big scandal at the time. And of course, now it's been superseded by the fact that both companies were taken over by the government in 2008 and, are producing enormous losses for the taxpayer because of the subprime mess. So this was really, years before the subprime thing happened, and yet we are still paying these legal bills.
And you write about how lawyers for the executives have received tens of millions of dollars as well.
Yes, those three executives, the CEO of Franklin Raines, the former CEO, I should say, the former chief financial officer, Timothy Howard, and Leanne Spencer, who is the former comptroller, together the taxpayer has paid, since the government takeover, $24 million in their defense. So, here are three people who were found by the SEC and by the Office of Housing Oversight, OFAO at the time it was called, to have, accounted improperly for the company's results, and yet here we are years and years later still being asked to pony up.
This graphic from the New York Times, where the money has gone. After the government took control of Fannie Mae, taxpayers became responsible for the legal fees of former executives facing securities lawsuits and other investigations. And we see the legal fees before conservatorship, which was in 2008, and then afterwards. And we can see the numbers here, the costs for the three former top executives, also directors, other executives, former and current executive vice presidents, and then even 195 non-executive vice presidents, over $17 million prior to September 2008 and over $15 million after 2008. Let's get to the phones. Shreveport, Louisiana. Charles joins us on the Republicans line. Good morning.
God bless C-SPAN, and it's about time we're having something like this. I haven't missed C-SPAN for 10 years. Every morning I watch C-SPAN. First comment is, Bill Clinton, they have this on tape, said he was part of the problem when someone asked him about Freddie and Fannie. He sent all his buddies in there to these banks and strong-armed and made them give these dang loans, knowing these people couldn't pay for them, knowing they couldn't pay for them. But they were black and they had to give it to them. Number two, Barney Franks. C-SPAN's got it on tape. We're just going to have to roll the dice on Freddie and Fannie, and we're just going to hope it works. Barney Frank's words, not mine. And the Republicans are going to get to the bottom of this, and some damn heads better roll. Thank you so much.
Well, I'll tell you what I would say about the recent numbers that we have found on these lawsuits and how much we're paying for that. They are really dwarfed by the losses that Fannie and Freddie have already recorded in mortgages. That's around $150 billion. So, in the scheme of things, $160 million for legal fees doesn't sound all that bad. But I think it just is this element of unfairness. And, what's very interesting, too, is that these numbers were very hard to pry out of the companies and out of their regulator. Thank heavens that Randy Neugebauer, a Republican from Texas, really went after it and asked for them. It's not clear we would ever have been told how much we're paying if he had not really been forceful about asking for these figures. And to me, that always is a sign that there's something, if they don't want us to know what we're paying, there's a reason for it.
The Washington Times had a piece yesterday called "Lawmakers Not Likely to Evict Fannie and Freddie." Patrice Hill reports that many members of Congress say they want to end the shotgun marriage between the federal government and mortgage giants Fannie Mae and Freddie Mac, which was arranged in the heat of the 2008 financial crisis, but breaking up could be hard to do. Gretchen Morgensen, how realistic is it to essentially split up or divorce the federal government for what's going on at those two mortgage giants?
Well, I think right now the consensus is in Washington that it would be very hard to do because we do not have a private mortgage market of any size and strength right now. We are still in the aftermath of the mortgage bust, and we still have lenders who are afraid to lend. We have many real estate properties that are underwater, borrowers who are unemployed. So there are tremendous headwinds against a market that can be operated by the private sector. So many people believe that this is something that has to be kept going for now. But I really do hope we can have an honest discourse on the future of Fannie Mae and Freddie Mac in Washington. But because they're such political animals, it's really something that we have never had.
Holyoke, Massachusetts. John joins us. Good morning.
Yeah, please don't cut me off. I have a couple of comments. What are these reporters doing here? What are these, they can go and arrest a couple of Italians, and I want to make this clear. This is not a racism kind of deal. The poor always are the ones that are always losing. When these fat cats go into Washington to make rules and regulations, they sit there, you let the wolves into the hen house, and you're going to lose a bunch of hens. Where's the white-collar crime here? Where is the cut down on white-collar crime? I mean, it was started by Bush. It was started by Paulson. You know, when you go in there and you put regulations in to favor the rich, you always take it up with the poor and the working class. If you don't want something to happen like Egypt over here, you better start cutting down on white-collar crime, and you better start arresting people when they're cheating the federal government.
Well, I hear this question an awful lot, and I have a lot of sympathy for the people who are asking it. I ask it myself. You know, we have just been through a traumatic episode. We are still have huge numbers of unemployed. The economy is starting to come back, but still struggling. And many, many people ask me, where are the criminal prosecutions? Why have we not seen people, you know, hauled off to jail after losing trillions of dollars, literally, for investors in their 401ks, their retirements, their pensions? And this is a really good question that I do not know the answer to. A lot of people say, oh, these are difficult cases to make, but it really is something that I would like to get to the bottom of in a future article, because it is something that is a burning question, I think, among so many people across the nation.
Let's go to Winchester, Virginia, where Jason joins us. Welcome.
Hey, good morning.
Good morning.
My question is, now that your 6 big banks of the world has taken control of Washington, will we ever be able to get out of the mess that we are now in? Thank you.
What a great question, Jason. That is really the crux of the problem that I saw after the Dodd-Frank bill became law. And that is that the whole concept of institutions that are too big to fail, that are too interconnected, too politically powerful to be allowed to go bankrupt, that problem was not addressed in Dodd-Frank. We are still very much in the world of propping up companies if they behave badly, as long as they're big enough, interconnected enough, politically powerful enough. And that is a very bad outcome after an episode like we've just been through. You know, being able to hold people accountable, the last 2 questions are really sort of linked, because holding people accountable for their actions, particularly if they destroy a company or harm its shareholders, is crucial to making sure that capitalism works. And the idea that now these companies are even bigger than they were, and therefore more threatening to the economy overall, is, I think, a very big problem that really needs to be addressed.
Sudha in Syracuse, New York, on our Democrats line. Welcome.
Thank you very much for the comments and the very informative conversation today. It was very helpful. I have one comment. I really wouldn't like to see scapegoating of prior precedents or legislators, because this is, you know, these 2 institutions have lived through multiple precedents, and it doesn't help to scapegoat anybody. What I would like to see is if a clear accounting of how much money went and where it went made available to the public, so we can at least find out what has happened. And did they bid for these like the rest of us do for contracts, or how did they all end up getting these monies? And I really appreciate the response on the prior 2 questions regarding the white-collar crime. People do need to be held accountable. Enron went down because of the white-collar crime. This is nonprofit. I think we have bigger issues associated with nonprofits as an organization. There is a lot of money going into nonprofits, and some nonprofits are real do-gooders, others are questionable. I think there is a whole ball of wax to be explored there as well. So I would really appreciate your finding out about the source of these monies and how much money went where.
Well, that's a great question, too, and this is something that should be widely available, and unfortunately it is like the monies that are going to defend the former executives of Fannie and Freddie, it's very difficult to come up with a final accounting or a reckoning, as you would call it. You know, the Treasury often comes out with proclamations that the taxpayer has actually made money on this deal or will make money on this deal. My feeling is that until we are really, truly out of the woods, until the economy is strong, and until we are certain that is not going to be a double dip or a second go-round of bank failures, large bank failures, I think it's too soon to say whether or not the American people have profited and to the degree that they have made money on some of these transactions, such as the TARP, the Troubled Asset Relief Program, or others. And we also, of course, have the Federal Reserve, which has extended and expanded its balance sheet tremendously in the bust to try to keep the markets turning, the wheels moving, and we really don't know the full costs of that and won't for quite a while. So a final reckoning is going to be hard to come by. I think that we have to, as journalists, I really intend to truth squad some of the commentary that comes out, because it really is, I understand that the government wants people to think that they made the right decisions and that these programs have actually worked out well, but you know, we really do have to wait and see.
Jeff asks on Twitter, why should the taxpayers have paid off 100% of Fannie and Freddie in the past instead of just doing so going forward, making a commitment to help them out forward?
Well, the reason that they went into conservatorship over Labor Day weekend in 2008 was because they are so integral to the mortgage market at the moment. As you recall, during that period, there was no lending going on. Anyone who wanted to buy a home, let's say your company was transporting you to a new town, you needed to sell your house and buy another. Anyone who needed to take out a mortgage to buy a property it really was out of luck without Freddie and Fannie in the room. So what they did at the time was they wanted to keep them going, they wanted to prop them up so as to keep the mortgage market moving. People do need to have access to money to buy properties. And so that's really the reason why. As far as they had to prop them up to cover the losses that were already being generated in order to keep things moving. So it was, at the same time, it was dealing with the past losses. It was also guaranteeing that they would continue to operate in the future. It was a little bit of both.
In California, Tim joins us on the Independent line. Hi there.
Hello.
Hi, you're on with Gretchen Morganson from the New York Times.
Yes, about this, it's in my community, we have a lot of businesses, and huge, 30, 40, 50,000 square foot buildings that are vacant, and some of them brand new and never been, had tenants or anything in there. And then you go a half a mile away, and then you start seeing the home foreclosures. You know, so essentially they're tied together. I don't want to get on the blame game of who's at fault for this, but we're not going to see a turnaround until we have jobs to fill the homes and then to create jobs for those businesses. And if I could, briefly, about the last guest that you had on there, saying that the top 5% of the wealthy people paying 95% of the taxes isn't accurate nor true. They can afford to pay $300 an hour for accountants and lawyers, tax lawyers, to not pay any taxes whatsoever, so they're not paying their fair share. Adds to our deficit and our national problems.
Well, as far as the unemployment question, absolutely right. I am in total agreement. Until we can get people working, we are still going to kind of bump along on this sort of slow growth, slight recovery that we've been having. Believe me, it's better than a double dip recession, return to recession. But, you know, it is still deeply unsatisfying to the many, many millions of people who cannot find work. And it's true that the economy really can't recover robustly unless we do have unemployment. So what we have to hope for is that companies do start hiring again And, that this is the beginnings. We are hopeful that this is the beginnings of a true and a little bit more solid recovery that we're starting to see.
Another California caller, Stephanie, this time on the Republicans line. Good morning.
Good morning. I want to address the first caller when he mentioned the word that all the black people are in buying Fannie Mae, and that was not dispelled by your guest. I was actually screwed over by Countrywide, who was taken over by Bank of America. I don't know why there was never any article or major talk in regards to how Countrywide's executives got away with, I guess, the crimes that AmeriQuest had to endure. There was a global lawsuit with AmeriQuest, but with Countrywide, it was just swept under the rug, and they were taken over by Bank of America. And I want to introduce another word that hasn't been talked about lately, and that is the working poor. So everyone is losing their jobs, and now they're willing to work for pennies on the dollar. And I'm sorry, but an $11 and a $12 an hour job cannot buy a house. Thank you, Chief Fannie.
As far as the Countrywide questions that your caller just made, I wrote many, many articles in the New York Times about Countrywide's practices in 2007 and followed through the company 2008. Wrote articles about Angelo Mozillo, the former chief executive, and how much stock he was able to sell, and when he settled with the SEC last year. So I would urge your caller to look up Gretchen Morgenson at the New York Times and Countrywide. There are plenty of stories on this company under my byline, and it really was the largest lender in the country, the largest subprime lender in the country, and was also very, very integral to the Fannie Mae problem because it was the largest supplier of loans to Fannie Mae. So those two companies are deeply, deeply intertwined. Now, I agree about the working poor. It is absolutely something that we need to have higher paying jobs in this country if people are to be able to live, or have the idea that they can have a better life and, rise up in the economic ranks rather than fall down.
And Gretchen Morgenson, how much reflection, I mean, obviously this has been done on some levels, but do you think the reflection is ongoing at this point to what Fannie Mae and Freddie Mac were doing in the 90s and the 2000s as everyone's sort of picking apart and looking as Congress is examining more closely what was going on? When we talk about taking advantage of certain, the working poor, or people who really wanted to be able to get homes and get mortgages, but it otherwise would have been out of their reach.
Well, I think there was a positive idea. It was a do-gooder idea that homeownership was a positive, that if we could raise the rates of homeownership in America, that would make America a better place. And I think it just, like some noble ideas, went too far. And what happened was you had banks that really understood that as real estate prices rose, the regular traditional 30-year mortgage was out of reach for many people. And so what they had to do was come up with these crazy mortgages that had only interest payments, or that had a low interest payment initially, then went up. And it was a way to make housing affordable. But really what should have been asked at the very outset was, is home ownership something that really should be pushed by the government, by the private sector, to the degree that it becomes a problem, as it really did become? And I'm not sure that we're going to have that honest dialogue as we look this year to dealing with Freddie Mac and Fannie Mae, but I think it is imperative that we do. Now, just so you know and your viewers know, Randy Neugebauer, the congressman who asked for these figures on the legal bills, is sponsoring hearings in February on this very issue. So I think your viewers might be interested in watching those hearings. I believe they're on the 15th of February, but everyone should look out for those.
Stephen, Democratic caller in Annapolis, Maryland. Good morning.
Hi, But can you hear me okay?
We sure can.
Okay. Hey, first-time caller, but I've watched C-SPAN a lot. I'd like to sit at a little higher level on this. I'm quite well off, and I was just terribly lucky to end up working for Intel Corporation for 20 years through the boom time, okay? But when I look at what happened to this country, you know, basically, and I think these are CBO numbers, something like 15 or 17 trillion dollars of family net worth was destroyed in this whole business with the banks and Wall Street and the home mortgage industry. And what basically happened is, I think that banks fundamentally, they became agents. They didn't hold the mortgages, so they became commissions. They became in effect commission operations, and they would sell. They would simply sell off these bad loans that people couldn't afford, all, you know, off to the average investor. I was lucky. I sort of saw this in the I didn't get hurt too badly in the Wall Street debacle because I saw that something was terribly wrong and kind of backed off. And I mean, I'll give you an example. Talking to an FBI agent, something like 100 people in the country were so depressed they actually murdered their whole family and committed suicide out of this.
Well, there's no doubt that this has been a terrible crisis, and it's ravaged people's, you know, homes, their families. Obviously, if you're unemployed, that's an enormous burden. There is no doubt. I don't know about the 17 trillion, but there has been trillions lost, obviously, in this mess. And I would say, yes, I agree that one of the key culprits was that there was no responsibility held by the lenders in these circumstances, where you had a situation where Countrywide could make a loan that was really didn't have a chance at getting repaid, and then sell it to an investor down the line. That is absolutely a recipe for disaster.
Linda weighs in on Twitter and says, homeownership makes people stakeholders in their country and their own futures. Fannie Mae and Freddie Mac may not have been the best approach, but she believes the goal was good. Our guest is Gretchen Morganson, assistant business and financial editor at the New York Times. She's the author of books in Forbes, Great Minds of Business, and also The Woman's Guide to the Stock Market, and she was the recipient of the Pulitzer Prize in 2002. Fran writes to us from New York State that I know for a fact that mortgage brokers and applicants lied on applications. Are there prosecutions, and what is your take? Gretchen Morganson.
There was definitely a lot of lying going on. There were even loans that people called liar loans because people were not required to show any documentation of their income, documentation of their assets. And so, yes, there was a lot of lying going on. The one thing, you know, a lot of people say to me, well, since the borrowers were lying, they were absolutely complicit in this. The bankers were lying, yes, they were also complicit. But one of the things that I found out when I was reporting on this that I found extremely interesting about who really wanted to know whether there were lies being put on these applications is that the banks would, whenever there was a so-called liar loan, if you were going to go into a bank and say, I can't provide you with my income or my assets, but I want to take out a loan, what the banker would do would be ask you to sign a document that would go to the IRS, that would allow the bank to go to the IRS to check your income. This was something that was routine, it was done constantly, and yet, as I spoke to people in this business who were sort of ramping up to try to be in the service of going to the IRS, checking for the banks on their behalf, nobody ever checked. The bankers did not want to know. They never contacted the IRS, many cases. So it was a document that could have told them that their borrower was lying, but they didn't want to know about it. So to me, that is a obvious example of looking the other way and really just wanting to get the fee, to make the mortgage, to then sell it to an investor down the road.
Another Washington Journal Twitter follower says that my mom worked for Countrywide for a very brief period in the thick of it and said intense pressure was applied to give loans to the poor. That's one person's experience. Let's go on to Dixon, Illinois. Nikki on the Republican line. Welcome.
Hi, thank you for taking my call. I just more or less had a statement. I have a son that lives in Decatur, Illinois, and unlike New York, California, etc., the homes in those areas, I'm sure, are like $200, $300 or more $1,000. My son, at the time when he was applying for a home loan, which he also had like a 20% down payment that he saved on it, he went to a realtor. They told him, sure, we'll give you a loan for a home, you know, which was in a reasonable rate, like $50,000 that he could afford or more. And in that area, that's a pretty good amount that you're paying for a halfway decent home. Unfortunately, as he went to the banks, they refused him, you know, to get a loan. Actually, at first they was said, oh, yeah, you're fine. Well, you know, go out and start looking. You've been pre-approved to get a home. And after he looked, and he's divorced, and he has a little son, he was really looking forward to buying a home. Well, his rent in that area is $800 with a loan that would also include for a home. He's got a bachelor's degree, and he's smart enough to know how this works. He was able to afford that amount. Unfortunately for him, he pays child support that is $600 a month for one child. So as soon as they found out that he had child support payments of $600 a month, they refused his application for a loan.
Let's get a response from our guest on situations like this.
Well, this is probably something that has happened recently because what happened after the crisis hit and after all of these losses were, you know, flowing through the system, banks just became very, very wary of lending. And so in this type of a situation, the bank is saying the exact opposite of what it said during the boom. And so you do have a lot of people in circumstances where they might be able to afford the loan, and they have the down payment and they have the job, but now the banks are saying no. I mean, it is typical. It always happens when you have a boom and a bust. The pendulum just absolutely swings to the absolute opposite end of the spectrum, and that's what it sounds like your son is going through.
In Washington, D.C., Diana, good morning.
Good morning. How are you?
Good, thanks. You're on with Gretchen Morganson.
Okay, well, I want to say two things. First of all, for everybody who was listening to the gentleman who was on just before Gretchen, who was extolling the virtues of all the wealthy people that live in Washington, D.C., who have all these fabulous houses, you might have pointed out to him that in the building that you were sitting in, within 5 blocks, there are about 4 or 5 homeless shelters. So not everybody that lives here is as wealthy as made it sound like, and we have quite a bit of unemployment here. But what I wanted to say to Gretchen was, I'm going to hold you to the statement that you made, that you were going to hold people accountable or find out what happened to all of this money, and particularly what happened to the case against Maxine Waters with the bank-in thing and her husband. Why did Barney Frank not have to pay a price for his shenanigans with Fannie Mae? What happened to Chris Dodd that he was able to just retire and not pay for any of his misdeeds? How come Charlie Rangel? What happened to Blagojevich, who supposedly cheated the government of all this money? I mean, all these cases just sort of quietly slipped out of the news.
I'll tell you, I think that is a big, huge problem that people absolutely agree with you on, and I think it contributes, unfortunately, to a sense that there are rules for powerful people that are different from the rules for everyday people. And I don't think that's what America is made of, and I think that as we move forward, the accountability issue will grow ever larger. I do think that we're starting to see some government reports coming out about the crisis that are really trying to fill in some of the pieces of the puzzle that have been missing. but this is an incredibly and excruciatingly slow process. I feel like I've been writing about this now for 4 years, and I still feel I don't know the half of it. So I pledge to do my very best to get a final accounting and a final reckoning and to hold people accountable.
From Cleveland, Ohio, Loretta, Democratic Line. Good morning.
Oh, good morning.
Hi.
Hi. Gretchen, I think the reason you don't know the answer to your questions is because you already want to pre-describe blame. This all started with Bush's Ownership Society program. Do you remember that? It was for the poor. The Ownership Society was put out by the Republicans and Bush, a program where the poor can own a home. Now, what it ended up being a classic inside job. And the reason why I say that is because Bush and them rolled out the TARP money, and they didn't have a mechanism in place to keep up with who got the loans.
Well, I would say in answer to that we really have expended an enormous amount of taxpayer money to prop up and to resolve troubled institutions. And the argument that the government always makes is that these institutions are extremely important and integral to the operations of our society, to the financial markets that have to operate smoothly in order for businesses to run, people to earn money, people to be paid. There were tremendous amounts of money that went out the door, and some of it has been well spent and some of it has been returned. But again, as I said before, I think we need to do a final reckoning, and that is going to take a long time. It is not, we cannot come up with that answer right now.
Comment from Matt on Twitter: corporations only get the rights of persons, none of the responsibilities. They're legally immune to criminal charge. That's his opinion. And we have a comment on email, a question asking if you can talk about the history here. Greenspan's conspiracy, writes our emailer, to get us out of the recession in 2001 led to the housing crisis. People were using their equity to fund purchases. They were buying homes, which employed contractors. So this was an idea to prop up the economy on a false monetary premise.
Well, there's no doubt that after the bubble, the internet bubble burst in 2000 and 2001, we went into a recession. The policymakers in Washington were very fearful that the recession would be deep and long, and so they dropped interest rates, and Greenspan and the Fed brought interest rates down to a record 1%. And that fueled much of the boom in lending, and it fueled this leverage that many, many institutions took on.
Gretchen, we're going to have to leave it there, I'm sorry to say.
Okay, sure.
Thank you very much for your time this morning. Sorry, we have another program to get to.
You're welcome.
We appreciate you being with us. Gretchen Morgensen, our guest from the New York Times, talking with us about Fannie Mae and Freddie Mac and the cost to taxpayers. Thank you to all our guests this morning on Washington Journal. We'll be back tomorrow morning at 7 o'clock Eastern Time. And coming up next on C-SPAN, we'll go to the Senate Judiciary Committee. The House is out this week. The Judiciary Committee will be looking at the constitutional